Oh my God, what a bloodbath today. Dow Jones down 1,000 points at the end of the day. S&P 100 points. Where's the Nasdaq? Nasdaq down 355 points. But look at the percentages: 3%, 3.7% for the Nasdaq. The Dow 3.5%. S&P 500 3.35%. That's a lot. Usually the indices usually move 0.5% per day. Even throughout the day, there was so much movement. If we look at one day here on the S&P, you can see, of course, it dropped hard at the beginning of the day and then started going up again and then dropped here again. And then towards the end of the day, when we started getting hope again, closes the day almost at the lows of the day. The low of the day here is 3214. Now, if I go to my Questrade account, I'm pretty sure I had 4,100 equity in my margin account today, 1353. And actually during the day, if I click start of day, see start of day, I had 3688 equity. And now currently, end of day, 1353. And that's what I get for being in a margin account. Really, if I look at the positions in my account, I've got a few stocks, covered call trades, but mostly they're SPY put spreads. Now, some of them are in the money right now. So this one here, I've got a 328 short strike. So what that means is for this trade to be profitable for me, the SPY needs to trade above 328 come March 20th. Today, I think it reached almost 320.5. Actually, let's look up what's the lowest of the day on the SPY. So the low of the day on the SPY was 321.24. So I've got 1, 2, 3, 4, 5. I've got 5 put spreads on the SPY that are in the money right now because the short strike, so in this case 325, here 326, and then 3 of them are 328. The short strike is in the money, so I really need the SPY to trade above at least 325 by mid-March, March 13. As you can see, here is the earliest one I've got here, March 13 at a 328 strike. So if that doesn't happen, I could be losing a lot of money. But today, I sold some new put spreads. I'm not going to leave a good day like this when the VIX is 25. Wow. I think last time the VIX was at 25 was December 2018. I think it was at 30 almost. So today is a pretty bad day. Anyways, so I sold 2 put spreads on the SPY today. March 27, March 30th. One has a 308 short strike and the other one has a 305 short strike. And pretty safe, right? Depending on where we stand today. If we stand at 322 right now and this is after dropping so much, then 308, 305 looks pretty safe compared to that, right? I collected 77 cents on this one and I collected 80 cents on that one. And as you can see, this one's already showing a small profit, but obviously not going to close. And this one's showing a small profit as well. But all the others, of course, let's look at the March 13 one. See, this one's showing almost $500 loss. And then I've got Uber covered call, United States covered call. It's just something I want to get rid of, so not worth talking about. So Friday, I sold a put spread on MasterCard at a 325 strike, March 20th, because I like MasterCard. It moves pretty well. And I sold only 1 contract. So today I decided to sell 2 more contracts just so that I have the number of contracts are the same. All my SPY put spreads, I have 3 contracts. So I added 2 more contracts to this trade, and I chose the same strike because I just wanted to have 3 contracts within this trade here. Obviously, MasterCard was trading at 323, and I went with the same strike of 325. So normally I would never do that. I would go for a much lower strike than what the current market price is. But I only did that just to turn this trade from 1 contract to 3 contracts. And my average credit here is about $1.77 or $1.74, so it's not bad. My risk would be the difference between 5 and $1.74. I've got 3 contracts, so times 300. But I've got until March 20th for MasterCard to trade above 325. It was trading at 345 last week, so I think it has a good chance if the market doesn't really crash and it's just a matter of a small correction like we always get. I think it has a good chance of going back above 325. But anyways, my goal is just to close at 50% profit, so if I collected $1.74 from this trade here, I'm trying to close it for 87 cents about. I don't have to wait till expiration. But for me to close it at 87 cents, MasterCard needs to come back up a little bit, or volatility or the VIX needs to drop. So today in my margin account, I did 2 put spreads on the SPY at 308, 305 short strikes. I added 2 more contracts on a MasterCard put spread that I had opened Friday at a 325 strike, and I did an earnings trade on Home Depot. They announced earnings tomorrow morning. I went at a 225 short strike, collected 95 cents, so I'm risking risking $4.05, but I've got until March 27th. Tomorrow, when earnings gets announced, usually there's a crush in volatility, so the premiums drop in value, and if Home Depot goes up, then that's double effect on this put spread. I can close it for at least 50% or better. But if it drops, if Home Depot drops, hopefully it doesn't drop below 225. Right now it's trading at 240, so I still give myself 15 points of error. Not only that, even if it drops, I've got until March 27 for Home Depot to recover. So I've got 32 days in case this trade goes wrong. And if it doesn't go wrong, well, I can most likely close it the next day. So it's similar to the Nvidia trade and the Amazon trade. So that's basically it in my margin account. In my TFSA, I didn't do anything, but of course, you know that I bought 100 shares of the Qs last week. So $23,000 spent, and today, look at this, it's trading at 221. I would have been better off buying it this week. If I just waited a week, I would have bought the Qs at a much better price. So I'm down $1,249 on the Qs in just 1 week, but I've got covered calls on it though. So I've got a March 6th 232 call option. I was actually trying to close it today because it's actually in profit. I was thinking of closing it and then selling another call option at 232, but expiring this week, February 28th. Because look how much profit this is, $3.88, and sold this for $3.88, and today it's worth 60 cents. And I did this Thursday or Friday, I think, last Friday. Yeah, February 21st. So tried to close this, order didn't get filled. In my RSP though, I did something a little bit similar, a little bit scary because it's $16,000, but I bought 100 shares of IWM, which is the ETF that tracks the Russell 2000. So I really want to do covered calls on the indices because it's overall indices go up over time. So S&P 500, Dow Jones, NASDAQ. Problem is S&P's the best ETF that represents the S&P 500 is the SPY, and it's too expensive. It's going to require $33,000 or $32,000 right now. Dow Jones, it would be the DIA ETF, requires about $27,000. The NASDAQ is the Qs, which I already have in my TFSA, and then the Russell 2000 is the other index that the Russell 2000 is the other index I want to invest in. So I bought the IWM, which is the ETF that tracks it. And if we look at the Russell 2000, if we look at Max, it always goes up. It's one of those ETFs or indices that always goes up over time. So even if it crashes a bit, it's just a matter of time before it reaches my purchase price in case my purchase price was higher. In the case of a stock could drop and might never come back to that same price again. So I bought 100 shares of IWM at 161.87, sold a call option at 164.5 strike for this week, collecting 77 cents. So this week alone, that represents a 0.4% return. But if you annualize that times 52 weeks, that represents a 24% return annually. Now, of course, not every week is going to be the same. Especially this week, we had high volatility, so the premiums were high. But here's my goal with this ETF. I don't plan on selling it. I want to keep it forever. I'll collect the dividends that it pays. See here, IWM, it pays dividends. Not that much though, but still pays dividends. I think less than 2% per year. But I'm going to increase that dividend by selling covered calls on it. For example, this week, I'm able to sell a covered call at a 164.5 strike, collect 77 cents. So that's about 24% if we continue at that same rate. Plus, I've got a strike of 164.5. So if IWM moves up this week on to Friday, if it moves past 164.5, then I lose my shares at 164.5. But that gives me some decent capital appreciation. From 161.87 to 164.5 will be my capital appreciation in 1 week, plus the 77 cents I collected by selling the covered call. But I could easily roll it over to next week. So if that happens, I'll buy it back. I'll buy back the 70 cents. It'll probably be worth, depending on where the stock is, I'll have to buy it back and then sell the next week at a higher strike or even the same strike. So my goal is just to keep selling weekly options on IWM slightly higher than the current market price. So right now it's at 161, so I went at 164.5. If it's trading, let's say at 165, then I'll sell a call option maybe at 168, 169, 1 week away, depending where I can collect some decent premium. So that's my goal with this covered call trade in my RSP. It's a little scary because it's not my favorite index, but I didn't have enough to do the Qs or the SPY, and I don't want to do individual stocks anymore. So I'd rather stick with something that over time always goes up, even if it doesn't have the greatest annual return. But I know that right now, let's say IWM drops to 150, 145. I know that it's just a matter of time. It's going to come back up above 161. So that's my goal with this trade here, and I want to liquidate my other positions in my RSP whenever I can. And in my TFSA, I still have some buying power. I've got 11,000 available in US. If the Qs continue to drop, I might buy some more. The dollar cost average my position here, so 233 is my cost right now. But if I buy some today at 221, well then my average will be lower. Obviously I don't have enough to buy an additional 100 shares, but it'll have an impact. But I'll wait to see a bigger difference, like at least a 10% drop. If it drops 23 points from 233, then maybe I'd buy some more Qs. So yeah, so that's where I stand right now with my portfolio, and looking forward to Home Depot tomorrow morning. I hope I don't get burned. I just need Home Depot to stay above 225. Hopefully it goes higher than 240. And I use this website I mentioned last time called Earning Stats, and if you look at Home Depot, it gives you it gives you the past 68 earnings on Home Depot, and you can see that 72% of the time Home Depot went up. So that's a good edge, right? So if Home Depot's trading at 240, there's a 72% chance based on the last 68 earnings, there's a 72% chance that Home Depot moves above 240 tomorrow. And it's always moved inside expected move 84% of the time. That's amazing. That's pretty high. That's a pretty high probability. And if you look at the graph here, looks pretty nice. So the gray zone is the expected move, and the bars obviously is how much it actually moved after earnings. So you can see only this over here moved way outside the expected move, but it moved up. So that would benefit me. This one here, it moved down. It went down, but outside the expected move. So that's bad. And the last earnings also went down and it's outside the expected move. So what are the chances that it does this 2 times in a row? So odds are, it looks pretty good. I hope that it that it goes up and stays above 240. That'll be in my favor. And that's if the general market doesn't drop though. So there's another risk right now, is that the general market continues to drop. So volatility is going to be high in general. So if the VIX is high, if volatility is high in general, it's going to affect the premiums of Home Depot. So I won't be able to close the trade early. But like I said, I've got March 27th. I've got 32 days for Home Depot to stay above 225. So I hope you could see how fun selling put spreads is. It's scary, it's risky, but you're giving yourself a lot of room for error, and you could still make money even if you get the direction wrong. All right, so if you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.